He's Peter Hugg, Kitco's head of precious metals. Peter, welcome back to Kitco.
Good to be here, Michael.
We had another huge week of volatility.
I can't argue that silver's down $1 today. It's moved in a $1.30 range. As we've been saying for the past few weeks in these segments, I expect volatility to remain with us through the balance of this year. So I'm not surprised.
Can you take us through some of the factors? You would have thought that this would have been how would you say, a risk-off day, considering we had those extremely weak ADP numbers. But then again, you said there was some news out of Europe that moved the markets.
Yeah, I mean, this is probably the worst week of the year generally. The week leading up to Labor Day. I know now that we're in COVID, things are obviously different. Not everybody is sending their kids back to school. But sort of the last week in August leading up to Labor Day tends to be very, very thin. A lot of people are organizing their kids for school, trying to take advantage of sort of the last week of summer, not official summer, but summer. So the markets are very thin. It doesn't take a lot to move the markets when you have this thinness in participation. This morning the ADP numbers weren't as good as expected, which initially was positive for the metals because that just reinforced the fact that the Fed is going to remain on an easy money mode. But then about an hour later, about 10:15, 10:20 our time, Eastern time this morning, the EU sort of made a statement where they indicated they were very unhappy with the strength of the euro. Most of the European economies are looking to export their way out of this economic malaise, and a strong currency does not portend well for that type of execution. So that took the edge off the weak dollar. In a very thin market, very volatile market, people took profits in gold and silver. And silver moved down about $1, and gold lost from yesterday's close in the neighborhood of about $30. I think it's all noise. I think this is a race to the bottom. Everybody's trying to cheapen their currency, and I don't think the U.S. is going to allow their currency to strengthen. So it's just a matter of who gets to the bottom first. I think the Fed remains extremely accommodative. The Europeans will remain accommodative. So will the Japanese. In that context, all of these dips are, in my opinion, are buying opportunities and not reasons to panic and think that the bull market is over.
I want to get to after we get out of this week and then what we see, because there's going to be some big news. But maybe you could take us quickly first through the physical market and what you're seeing with trading.
Well, the premiums have come down a little. Again, not as much as I'd like to see on gold. The argument is, the premiums on gold eagles and buffaloes are still around $100, but it's not the dealer premiums that create that $100. I mean, again, the U.S. Mint makes their gold eagles and buffaloes available at 3%, 3.25%, depending on who the dealer is. So you're looking, just on an acquisition premium of 50. You should be able to pick up gold buffaloes and gold eagles from any sizable dealer in the neighborhood of $75 to $80 premiums. So they've come back a little. They're probably still about $10 more expensive than they were pre-COVID. But supplies on gold product is certainly much more available than they was even last week. Silver, the squeeze still seems to be on silver eagles. There are dealers with silver eagles offering them at around 7.5 over spot. Silver maples down at around 6 over spot. Still a little rich, but certainly below the $10, $12 premiums we saw as little as 3 weeks ago. So inventories are starting to come into the market, and I think that's more of a reflection of the metals markets pausing, and gold not breaking out over 2,000 and just sort of holding a range of 1930 to 1970, and silver sort of holding between the 27, 28 and a half range. As the market goes sideways for a while, the demand from retail, or let me rephrase that, the urgency for retail to chase the market dies down. to some extent, and that allows dealers to restock inventory as they're getting allocations out of the sovereign mints. If they're not selling as much, the inventory starts to build, and that'll take some pressure off the premiums.
We're going to have, we're going to be officially out. I should say we're going to be out of summer next week because we're going to have Labor Day, which means that, as you said, everybody's organizing themselves so they can get themselves fully back into the office. So we're going to have the full weight of the markets coming back into us in September. We're going to be past the summer. We're also going to have a jobs report that's going to be past us on Friday. Can you tell us what you're looking for that's going to be happening into the next month in the precious metal markets? What should we be prepared for? And then also, if you could talk about this job markets and the possible impact it'll have on precious metals.
Again, I think the job data is going to be sort of a knee-jerk reaction to whatever data comes out. I think people are being slightly optimistic on expecting the unemployment rate to drop quickly. I think it's going to take some time as the workforce re-gears and comes back, into the system. Excuse me. There's still the unknown about school. Whether the schools will continue to stay open, whether that will impact your ability to go back to work on a full-time basis if your kids can't go back to school. So those questions are still out there and open, and I don't think we're going to have any good answers on that probably until the end of September, or at least third week September. So that's still in play. Obviously, you have the elections coming up in November. And right now, I think it's a horse race. Maybe 2-3 weeks ago, it looked like Trump was in trouble. He seems to be tightening it up. So there's a lot of anxiety as to who's going to be the next president, what that means for especially what it means for the financial markets, the equity markets. So all of that sort of uncertainty and that angst, given and added to that the stimulus that is being pumped into the market by not only the Fed but all central banks, is going to continue to create volatility in the precious metals markets. And in my opinion, I think the uptrend is still intact. We have not lost 1925 on gold on a closing basis, and as long as that holds, I'm still very constructive, both gold and silver at these levels.
Peter Hug, thank you very much for your time.
You're welcome.